Hey, what's going on, everyone? Today is May the 1st, 2022. I'm going to talk about the updated stock market crash. Jerome Powell is trying his best to make it a soft landing. He doesn't want to make the market erratic. He doesn't want to make it more volatile to where people become more irrational and just try to make rash decisions because price is moving so violently to the downside. I'm going to talk about that because I'm here. I do price predictions simply by looking at the price chart. So to those who are new, to those who is today your first time clicking on my videos, my content, I am here. This is what I do. I'm not here to confuse you. I am not here to make this complicated. I am not here to hype you up and try to tell you that everything is a buy, because clearly it's not. So I'm going to talk about the overall three indexes today, the S&P 500, the NASDAQ, as well as the Dow, and try to pinpoint where is the next move going to be. It's going to be up or down. So if y'all appreciate it, join the team, join the community, hit the like button, share the video, also subscribe here to my content. I want you all to learn that you can do this for yourself and you don't have to be dependent on anybody. All you have to do is come in and learn how to read price charts. That is where the answers lie, is understanding and interpreting what these price bars really mean. So check this out. Jerome Powell is literally trying to create an environment to where he needs to bring down the overall inflation, or he needs to try to get a grasp and control of a hot market, right? He needs to try to control that. And so far, mainstream media hasn't really created the environment that would instill people making rash decisions. I mean, I did a community post on my channel, right? Let me show it to you. And many massive stocks, mostly in the technology sector, have already seen massive breakdowns in valuations in a very short period of time, right? So when you look at Teladoc, Netflix, PayPal, Alibaba, Peloton, Pinterest, Disney, Facebook, Roblox, Block, ARK Invest, like many of these conglomerate companies back in 2021 were high flyers, right? Everything was going up in price. Everyone was ecstatic. Everyone was feeling great. And now these stocks right there, just a list. This is just a small list of stocks that have completely collapsed, completely. But when you look at the three indexes, right? When you look at the overall market, this index, the S&P 500, doesn't look that bad. The NASDAQ doesn't look that bad. The Dow doesn't look that bad, but yet and still many stocks are down double digits, well into bear market territory. So to me, even though Jerome Powell or the Fed has a massive job ahead of them, when you look at these individual stocks, yes, they look terrible, but when you look at the overall broad markets, it doesn't look that bad. So to me, it does look as if Jerome is doing a fantastic job at quelling people's antsy or unpredictable market movements that they really want to do. It's pretty much a soft landing right now. He is creating that expectation of making it a soft landing. Now, have some other individual stocks been beaten up? Yeah, look at them. There's just a list of them right there, a few of them. But overall, the soft landing is definitely being created so far, which is why I'm coming through to give you all the stock market crash updates. Because if the stock price is still weak, if these three indexes is still weak, then you don't need to be bullish. You don't. So let's start off with the S&P 500. I went ahead and I did a video in S&P 500 on a weekly chart. So let's go ahead and look at that from a weekly perspective. And I was telling you all that I was going to be bullish, right? But I wanted you all to know that I set expectations because I wasn't massively bullish in the S&P 500. The last time I did a video was on March 27th, 2021. Now you guys could go back and listen to the video because it's still available, but I wasn't that bullish, right? I told you all that we may need to take some profitability out of the S&P 500 index around 4,500 points. Now we reached that the next following week, right? And needless to say, that was the only opportunity we had to grab some profitability, because now this S&P 500 index is definitely trending lower, which gives us another clue like, yeah, this is not a bullish market. This is not a buyer's market So what the market is trying to tell us is don't buy. That's literally what this chart is telling us right now in the S&P 500 is don't buy, not a buy, not at these prices. We need to wait until the buyers show up. So if you wasn't able to capitalize on that small profitability of around 1%, then yeah, you're down around 8, almost 9% now. But hey, it goes that way, which is why I dropped price targets. So I want you all to know that you need to nibble. You need to take some of your position off to win. Now let's talk about this though. Okay, so two things for the S&P 500. First one is that the buyers could not capitalize and bring price above 4,600 points. The second thing is that the buyers could not even bring price above this trend, right? This ascending line. So obviously, the market is still trending weak. It is still trending lower. So we should not be bullish into the market in the S&P 500. So rather than that, we are now going to follow the downtrend. Okay. We're going to follow the downtrend. Now, where do you think the buyers are at? Because they already created where they was willing to prop up the S&P 500's price. And it's right there. Okay. They need to hold that, because if they do, then we know that, yeah, this is a small limited opportunity to buy. I'm not saying that you need to buy this for the long term, but really you can buy it here. Let price go up to around 4,300 points and sell it, maybe 4,400 points and sell it, because we're still in a downtrend, right? But first, let's look at this on a monthly chart, because we're starting out on a new month, and that doesn't look bullish, not one sense of the word. Last month was massively bearish in the S&P 500 to where I need to lower where I think the buyers could be. Are they around 4,000? Where do you think the buyers are at? 4,000? Maybe around 3,700, 3,800? Because what I think the market is going to try to do, rather than make this some type of erratic movement like when the pandemic happened back in March of 2020, the market just completely fell down. They're trying to make this slow and methodical. They're trying to make this easy. So are we going to completely crash down to 3,800 points? I don't think so. But I think it's going to be like a gradual, continual movement lower. Okay. 3 weeks. So my first attention for the S&P 500 is going to be around 4,000. Then my second one is going to be around like 3,700 points, maybe 36. Okay, now look how far we are away. We're around 4,100 points now. That's around 12%, 13% movement to the downside. Okay, but I'm going to stair step this down. So switching back over to the weekly time frame, let me go ahead and drop the price prediction, because the market literally is telling us that this is not a buying opportunity. Okay, the restriction area is going to be here around 4,500 points, so 44, and alongside this descending line. Okay, we know if the S&P 500 doesn't trade above that descending line, that we know the overall market is still weak. Okay, first price target, like I said, is going to be around 4,000. That gives us around 3.8%. Second is going to be around 38. It gives us 8.5. Longer term, 3,600 points. Now we may not even hit 3,600 points. I get it. So definitely pay attention to around 4,000 and 3,800 points in the S&P 500. Okay, right there. So now that's the S&P 500 from a weekly chart. Now let's go ahead and look at the NASDAQ. Okay, we're going to go ahead and look at the NASDAQ. You guys can see here, just like the S&P 500, we had a small opportunity, maybe 2 weeks to go ahead and profit off the market around 15,200 points. Hopefully he was able to do that. 3%. That's it. If not, current position will be down 12%. Yeah, it doesn't look pretty, does it? But nevertheless, we can still see how the market in the NASDAQ is trending a lot weaker. Like the technology sector versus the S&P 500 and the Dow is definitely one of the weakest. So like if you wanted to short an index, it would definitely be here in the NASDAQ, because this overall market is trending a lot weaker. Okay. Now, the biggest thing that many people have not really considered is that market likes trends. So generally we're still in an uptrend, but look how far away we are in the NASDAQ. Like, man, this is massively bearish for us to be all the way up here around 13,000 points to come over down to 9,000 or 8,500 points. People are not thinking about that right now, but it can come to fruition if the market cannot get a handle as to what the Fed is trying to do. Okay, so let me go ahead and show you what the monthly chart looks like in the NASDAQ. Okay, this is massively bearish right here, because the overall low and where we closed is below the lows from the month of March and February. We closed lower than that level. So a lot of people are not bullish right now. A lot of people are definitely doing more selling than they are buying in the NASDAQ. So the first spot that we need to come in and try to expect buyers is going to be here now, around 12,200 points. That's the first level. Second level is going to be around 11,000. Okay. So let me go ahead and drop this on the weekly. First area for us to come and profit off the market move to the downside is around 12,000 points. I would say around like 12,200. That gives around 5.5%. Okay. 5.5%. 12,200, 12,000 points. The next level is going to be down here, around 11,000. That's around 14%. Now I'm gonna keep it real. Like I said, I don't think that it's going to be like a massive collapse in price. It's going to be slow, methodical. Like the market's going to take its time to bring itself lower to eventually to where you get to that price. It's not going to be like this. There's going to be weeks to where the market in the NASDAQ will move higher. Like, be prepared for that. But we're not going to be tricked into not thinking that this is what the people think. Those who are investing, those who are trading the market in the NASDAQ is doing mostly selling. Now, I want you all to see this, because it may be time for the NASDAQ to try to get a little bounce. All that volume came in last week, and we got a very small spread. So people are seeing this as a buying opportunity. But just because they're buying doesn't mean that they're buying for the long term. They may be buying just for the next pop up to 13,000, maybe 14,000 points, and then they're going to sell it there. But generally, long term, that's weakness. Okay. So now, let's go ahead and look at the last one, which is the Dow. This one's a lot stronger. Like, look how level-headed the market is in the Dow. This is where most people are buying, because this market is being very reluctant into dipping. The Dow is looking stronger than the other two. It's just keeping it real. So if we were to put this as a hierarchy, the Dow is first, the S&P 500 second, and then the NASDAQ is third. Price doesn't lie. Most of the trades, most of the price action here in the Dow is people buying. This is a very strong index compared to the other two, but it doesn't mean that it's not weak. We had a couple of weeks here on my last video to see the Dow go up. It didn't go all the way up there to 36,000 points. It only went to 35,500, give or take, 1.97%. If you didn't grab that, you're down 5.39% now. I get it, but we need to talk. Just like in the NASDAQ, look at last week's volume in the Dow, right next to areas to where buying occurs. Like, this is not by circumstance. This is not by coincidence. This is being planned. They know that buyers came in the Dow in the last couple of weekly price bars here, or at least down here. Okay. So since I know that the Dow is a lot stronger than the other two indexes, I cannot be that bearish as like I am in the NASDAQ. So looking at this, we can already go ahead and predict how low the market can go, right? Possibly to the lows that occurred on March the 7th, even on February the 21st, around that area. So that gives us around 2.75% profitability. Now, let's see this. If they don't hold price in the Dow at 32,200 points, where would be the next likely area that we would see the buyers? Where? You got an idea? Look at this on the monthly. It's going to be real hard because the market hasn't really established a firm area of support to where buyers are at. Not in this area. Okay, the next area that I can actually see a little bit formidable is here. Okay. It's right around there. So let's go ahead and do this. We got the first price target around 32,200 points. The second one's going to be around 31. I would say around, 30,800, 31,000 points. I'm just going to bring it down that low. I'm not going to bring it all the way down to 29,653. But we're going to expect some continued weakness to occur into the market in the Dow. All right, not as much, not as bad as the NASDAQ or the S&P 500. So definitely we want to pay attention to whether or not buyers come in here, because if they do, then that's the buying opportunity. If they don't, we know where we're going to continue to go, a little bit lower. All right, so now this is what I'm looking at. So far, has the Fed done a wonderful job at trying to quell any erratic behavior in the overall broad market? Yes, they have. With all that's going on in the world, they have done a pretty fantastic job as to not making people act irrational. But can it be sustained? Can they hold that? Can Jerome continue to do that with the expectations of how much he's going to raise interest rates? We'll see. But right now, this is what I'm looking at in terms of these three indexes. It's your turn now. The comment section is open. Tell me, what do you think? What is your price target? What is your price prediction for these three indexes? Where are we about to go? Is this a buying opportunity or should we wait? Let everyone know. Make sure you maintain the profitability, and as always, trade different.